Someone actually asked ChatGPT to predict the exact date of the next stock market crash, and it gave one. And while the date might sound random, the reason it picked it, that is what you actually need to hear. I've built an 8-figure net worth by understanding how these cycles actually work. And if you've been hearing everybody saying a crash is coming, and you're wondering what that really means, like, should you stop investing, or is this your opportunity to build wealth? This video will make it make sense. I'm going to break everything down for you in plain English. It all starts with what I call the easy money effect. Okay, so when interest rates are low, borrowing feels free. People take on more debt, companies expand, and investors start chasing higher and higher returns. And then that flood of cheap money, it pushes asset prices higher than what they are actually worth. And this is what economists call overvaluation. What you need to understand is that markets always swing back to reality. In economics, that's called mean reversion. Prices always return to their true value. Then we have the pressure point, right? Where inflation starts to rise. So central banks have to step in and raise interest rates so they can cool things down. This is called a tightening cycle. And all of that easy money suddenly becomes expensive. Debt payments rise, profits shrink, and investors start to feel the squeeze. When everybody is leveraged to the max, meaning they have so much debt, they don't have any free cash available. These people don't have money to buy the dip. That is called a liquidity trap. It's basically when the economy can't breathe. And that's when the domino effect hits, okay? So think things like a war or a default or a bad headline. That tips the first piece. And then fear, it spreads faster than logic does. So that tips the next piece. And people start to panic sell, okay? And this has been referred to as animal spirit. Basically, that human emotion makes markets swing way higher or way lower than any reality actually would. That's how a small correction turns into a full-blown crash. The part that people miss, though, is that crashes aren't endings, they're resets, they're wealth transfers. They make room for the next cycle of growth, and that is why the rich don't fear them, they prepare for them, because crashes and corrections are normal parts to every market cycle. This is why they make sure that they have a good handle on their cash flow, that they have an emergency fund, that they have a plan to pay off high-interest debt if they have any. This way, when everybody else is panic selling, they are scooping up quality assets at a discount. Back to ChatGPT, it predicted a fictional crash on May 16th, 2026. It said the market would drop in one day by 18% because of something called deep fake derivatives. Now that part is obviously BS, but the pattern it was thinking about to come up with that date, that makes sense. Now, if you want to spot when risk is building up, what I want you to look out for is people saying, this time is different. When people start taking on more risk because the safe stuff feels boring. When credit is easy and everyone's bragging about their returns. Those are clues that the market is stretched. If you want to learn how to make the next market cycle work for you instead of against you, apply to work with me as your 7-figure mentor. Link in bio.